Okay, so the article we chose for the linear regression in the business administration area is entitled Financial Risk Measurement and Prediction Modeling for Sustainable Development of Business Entities Using Regression Analysis. So the main aim of the paper is to extend the knowledge about identification and elimination of financial risk related to the unhealthy financial situation of the company, which is done by the formation of the regression model, the results of which enable to estimate the profitability of the company. Pause. The purpose of the paper is to measure financial risk considering national conditions. The research problem includes the formation of an economic model of the corporate prosperity quantification using the results of the regression analysis based on the significant financial indicators identified in the multiple linear regression analysis. We must consider the identification of the most significant predictors affecting the future prosperity and profitability of Slovak enterprises to be the main contribution of the paper. Those are working capital to assets ratio, operating profit to total assets ratio, cash and cash equivalents to total assets ratio, and current liabilities to total asset ratio. The paper is divided into four main parts. The literature review highlights the current state of research in the field of prediction and bankruptcy models. Material and methods depicts a brief description of business entities and financial indicators used as potential predictors in the research and specifies the methodology of the multiple linear regression. The chapter results is focused on the description of all findings, resulting in the suggestion of the model, which estimates the corporate prosperity and profitability, and thus eliminates financial risk. Discussion compares and analyzes the studies and researches of other authors in the field of prediction models and emphasizes the various combinations of different financial indicators used as predictors in the model and compares the results of the realized study with results of other studies based on different calculation methods. So for the statement of the hypothesis, the method of multiple linear regression was used to create the model. Independent variables were calculated from the data of 2015, and the dependent variable is from the records of 2016. The HO, or the null hypothesis, is that the independent variables are not significantly affected by the corporate prosperity and profitability. And the alternative hypothesis, the HA, is the independent variables is significantly affected by the corporate prosperity and profitability.
Hindi mo makaisip eh kung ano.
Choosing a sufficiently large sample that accepts some rules for determining the appropriate sample size to perform the regression analysis. We use the stepwise method, which does multiple regression several times, each time removing the weakest correlated variable. At the end, only those variables that explain the distribution best are left. The only requirements are that the data is normally distributed and that there is no correlation between the independent variable. Number 2. The dependent variable was defined as corporate prosperity and profitability measured by EBIT. We decided to choose the independent variable using the predictors, which are the most frequently used in the prediction models worldwide. Identification of independent variable is summarized in prosperity and profitability of the company in the future may be in the partly given by optimal values of the financial indicators. Based on the calculated financial ratios, we are able to classify the companies into two groups: default unhealthy, non-prosperous, and non-default healthy and prosperous. In the text of legislative adjustment, we considered three criteria which have to be met simultaneously and which correspond with the default criteria. Determine the Slovak legislation and the value of the corporate solvency ratios in less than 0.4. Current ratio is less than 1 and net income is negative. The company is prosperous if the conditions are not met. The company is healthy and prosperous, despite the fact that the study identifies a set of explanatory variables that can help identifying the state of the company. We considered only two states of the corporate prosperity, default of non-default. We follow the Slovak Commercial Code defining the principle and the economic criteria of the company. In default, which we were used to determine the independent variable. Number 3. Testing of Gauss-Markov assumption. Dependent and independent variable must be quantitative, and multicollinearity condition must be complied. Outliers to be removed, and the variable must be in linear correlation. We test the hypothesis of the dependence between the individual independent variable and dependent variable on the significant level of 0.05, which compared to the criteria p-value of the test significance of Pearson correlation coefficient. Last assumption is to ensure normally distributed of model residual cannot be autocorrelated. Step 5. Testing the significance of the created model. And the last step is to write the equation of the regression model to provide the multiple regression analysis. We use the software IBM SPSS statistic. We considered all business entitled in the database, accepting the selected sector and their specificities. As we want to determine the general predictors to assess the future corporate prosperity of any company.
So for the conclusion, the bankruptcy prediction modeling helps predict the financial distress of companies. The importance of the area is underlined by the fact that the information about the future corporate prosperity eliminates potential financial risks and enables to evaluate the financial health of the company based on selected financial indicators or other characteristics of the company or the environment in which they operate. Realizing the multiple regression analysis, identified we identified the statistical significant determinants that affect the future financial development of the company, and thus we form a regression model to estimate the corporate prosperity and profitability. As a statistically significant predictors were determined 7 financial ratios: working capital to total assets ratio, current assets to total assets ratio, operating profit to total assets ratio, cash and cash equivalents to total assets ratio, and current liabilities to total assets ratio. These factors are significant enough to manage financial risks and to affect the profitability and prosperity of the company, and can be later used in the model to predict the default of Slovak companies. The multi-industry model of the corporate prosperity and profitability perceives the value of the intercept as the limit value, which means that if the company has the value of the corporate prosperity equal or less than intercept value, there is a threat of financial problems in the future. Moreover, the corporate business partners have to consider their cooperation with the company in the future or take measures to eliminate or prevent the financial risk. The model has some limitation that is to be mentioned, and it is the low value of R square, which is 39.1%, which means that there is a space for unknown and unmeasurable changes that can have some impact on the corporate prosperity and insufficient total prediction ability, which is 58.91%. The choice of the method of linear regression may not be perceived positively, but despite the fact we were able to identify crucial predictors to be used in the further research, and also to quantify the future prosperity of the entities in the database. The further research with the same data revealed that it is more appropriate to use either the multiple discriminant analysis or the logistic regression to predict the future prosperity of any company. The main aim of the paper was to extend the knowledge about identification and elimination of financial risks related to the unhealthy financial situation of the company. The results gained in the multi-industry model are extra important for companies themselves, but also for their business partners, suppliers, and creditors to eliminate financial and other corporate risks related to the unhealthy and or unfavorable financial situation of the company. The formation of the complex prediction model in the economic conditions of the Slovak Republic is still missing, and thus the results of our research may be used to determine the financial ratios that can be based on the future detailed research used as the predictors of the Slovak prediction model. So as a comment for the conclusion, they identified the significant predictors and conditions of the specific economic environment to estimate the corporate prosperity and profitability. So the results gained in the research are extra important for companies themselves, but also for their business partners, suppliers, and creditors to eliminate financial and other corporate risks related to the unhealthy.